2468. Who do we investigate? Find out on the IssuesWatch Podcast. Fraud, yay! Hello and welcome to the IssuesWatch Podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer. The views and statements expressed herein are my own and not necessarily those of NJCPA or CLA. Okay, as I've said a few times lately, except for I think it was the last episode, that it's been fairly quiet. And again, nothing has come out, from the FASB or the AICPA. But I found a really, really interesting article in the Journal of Accountancy. You can find the links as part of the episode. And it was fraud considerations, AUC-240. That's the auditing topic within the codification. C is the codification, 240 is the section, if you don't know. I still like to go under SAS 99, which came out a while ago. We'll talk about when it came out and why we talk about fraud. But that's where it falls under AUC-240. So fraud concepts came out with SAS 99, which was approximately 2002 to 2003. Why do I remember this? Because it came out right when Enron was happening. And when you hear the responsibilities that we have that come under the fraud concepts in AUC-240, you can understand what resulted from Enron and then MCI and stuff like that. They said, okay, we got to start focusing more on some fraud activity and potential activity as it could relate to the financial statements. Now, before we go any further, just let us remember, as auditors, and for those that are in industry, especially those that are in industry, you should know that we are not auditing to find fraud. I'm going to talk about forensic people in a little bit during this session, but please know that as a financial statement audit, the responsibility is not to find fraud. I hear people say that especially in industry and some owners, and they're not accountants, so I didn't expect them to know what our responsibilities are, but I hear them say, well, my auditor looks for fraud. No, we don't look for fraud. We're responsible to take into consideration fraud aspects as it could relate to the financial reporting or misappropriation of assets too, okay? And wherever we deem there may be fraud risks, we have to increase our audit responsibility around those areas. Compared to a forensic person, now, if Becky, if it's you, is here from my office, she would say, Brad, you're not saying it right. But compared to a forensic person, their responsibility is generally to come into a situation to find where fraud happened, or if fraud potentially happened, where it was, and to the extent of fraud. They're focused right on fraud itself. Our responsibility is on the audit of the financial statements, and we have to consider where fraud could happen. So hopefully I was, straighten that out a little bit, but those that are in the industry, talk to the owners or consider it that we are not hired to find fraud. If you want to hire us to it, that's a different story. So now I said that, in this article, the Journal of Accountancy actually interviewed 12 different fraud practitioners for their thoughts on the fraud aspects as it relates to the financial statements. So some of the requirements that came out of AUC-240, and embedded in here, you're going to hear me saying what their comments were. Some of the requirements that came out of AUC-240 are three big areas I want to focus on: to maintain professional skepticism throughout the audit; two, to discuss with key members of the engagement team matters such as how, where an entity's financial statements might be susceptible to fraud, and how the auditor might respond to the susceptibility of fraud. So there you see the connection. Where might the fraud exist and how are we going to respond to it? And three, to inquire of management regarding matters such as management's assessments of the risks that financial statements may be materially misstated due to fraud, and their process of identifying, responding, and to monitoring risks of fraud in the entity. That's probably the hardest. Not the interviewing. We don't do it good. You'll hear it in a few minutes. But trying to get management, especially at some smaller, closely held companies, to try and get them to focus on and think about fraud, they're like, no, we don't know anything about it. Okay. Whereas you look at some of the larger companies, they've got more procedures in place and controls in place to think about this. Okay, let's go through those three areas, a little bit deeper. The first one, professional skepticism. Okay. One of my former partners, Ron Matan, every time in our planning meetings, he would say, remember professional skepticism. I don't know what the heck this meant, but he always did that. So I tried to get the AICPA to adopt it. That's our, indicator for considering fraud. So everybody that's out there, for Ron, that's what we say, professional skepticism. Don't just accept that, or we should accept that anyone can commit fraud. If you want to attend a very interesting seminar, attend a seminar on fraud put on by a forensic accountant with the fraud triangle. I'm not going to go into the fraud triangle here, with opportunity, et cetera, et cetera. But find out about the fraud triangle and consider that anybody can commit fraud, from owners down to stock people, okay? And yes, stock people could be stealing, taking assets. You should always consider something like that too. Avoid the over-reliance on past practices. Don't just do what you did last year. Don't just do what you've been doing for the past couple of years. Guess why? And you're going to hear later on about altering your procedures. The clients tend to figure out what you're going to do. And if they know what you're going to do, they're just going to do around it. I don't know many people that would commit fraud and steal a check right on December 31st and let it be an outstanding check. Okay? Be curious. We say that a lot about, especially the younger people. I'm not picking on younger people here, but we try and emphasize to the younger people, be curious, ask questions, and follow the show me strategy. Okay, the PCOB is very big on trust but verify. Just because management told you it is not evidence. And I appreciate it, and I know it's a difficult situation, especially those in the industry. It's like, what, you don't trust me? I'm sorry, I have to ask these questions. We found an instance where at our client, somebody was paying, the payments were being made to a vendor at the same address as an employee. Well, the employee was the brother of the owner, which my alarm bells are going off. And when I asked the people in management, I wasn't talking with the owner, they were mad at me, very mad. And I said, I'm sorry, I report to the board, I report to the stockholders, I don't report to you, and if you have to fire me because this is my responsibility. We got over it, they understood, but it's our responsibility. Discuss among the engagement team. Encourage all engagement team to attend meetings, your discussions on fraud, and engage them to participate. Emphasize unpredictability. That goes back to don't just do what you've done in the past, okay? By CLA, we actually have a worksheet for unpredictability. So we pick something different that we're doing every year. And now you want to pick something that, as it relates to, could be a potential fraud area. You don't just pick something because, it's easy to do. Count the smallest items or the smallest quantity when you're doing physical inventories. But consider unpredictability. I will say that, and I've done a lot of peer reviews, that's something that has been missed on a lot of practitioners. And I know you in industry are going to hate that. You didn't ask for that last year. I know. It's part of our unpredictability testing. We're supposed to do it. Leverage your findings from data analytics. Now, Frank and I are going to be talking about data analytics in an upcoming A&A symposium. I don't think that firms are doing it enough. We should be doing more data analytics. It's moved along from 5, 10 years ago when it was really, really expensive and nobody could understand what to do, so it's really come along. And brainstorm on an ongoing basis. Brainstorming is a requirement. That's part of the meeting, the brainstorming. Everybody dump your ideas of where fraud can exist. We usually have a large brainstorming, so we do a lot of EVPs, we do a lot of nonprofits. We will have a brainstorming meeting for those in general, and then we'll discuss each client itself. And the good thing is, since we used to do it internally, the general fraud concept for a particular industry, we would get CPE for learning internally, and it was really good for the younger staff to be involved in the discussions. Okay, the last area, inquiries of management and others. Recharacterize fraud inquiries as fraud discussions. Stop with the yes/no questions. Okay, that. Always ask open-ended questions. I see people ask the questions, do you know if there's any fraud? No. Okay, next question. Okay, figure out another way to ask the question. Now, I could give you examples, but it all depends on the person that you're talking to. They might be yes, no people, and you're going to have to work your way to try and find out how to ask that question. And you're going to go into who should be asking the questions. Consider the frequency of the fraud inquiries. Don't just do it during the audit. Okay, you could do it during the year, especially if you're doing interim work. Engage face-to-face. We don't recommend doing it over the phone. You talk to any forensic person, they like to see body language. No, I don't know of any fraud. All right, it's hard to see that when you're talking over the phone. Consider the experience and level of the auditor who's conducting fraud inquiries. Often we send the youngest person out there to do this. And you're dealing with a yes-no person. And what do you think a younger person is going to do? Is there fraud? No. Okay, let me go to the next question. Do you think there could be fraud? No. Okay, let me go to the next question. Has anybody said the word fraud to you? No. Okay, let me go to the next question. So you need somebody that is used to interacting with people and has the experience. You can send the younger people out that in less pressure situation, but just consider that. Challenge the client's explanation with supporting evidence. That goes back to the show me, okay? You have to trust but verify. Just because they told you it, that is not evidence. And inquire of personnel throughout the entity. So we talked about management, but if you know one of the fraud areas is shipping, and I'm just picking something here because is that really a risk of material misstatement? But it's shipping, you should go talk to the shipping clerk. Why are you talking to a shipping clerk? Because that could be where there's potential fraud. Ask them about the pressure test. Are they being pressured to do things that's inappropriate? Okay? And a couple other suggestions real quick. Review payroll detail. Look for different addresses. Look for odd withholding amounts. Review credit card activity, especially on nonprofit entities, for review credit card activity for personal charges. Enhance testing with lack of segregation of duties. And the last one we always say is, who opens the bank statements? It's a very simple one. Oh, the bookkeeper does. Oh, that's the same person that cuts the checks, does the bank rec, etc. Have the owner or management open up the bank rec and just flip through it. That's a nice and simple. Well, it's online. There's always excuses. Then go online and look down the bank statement. I recommend that's one of the easy ones we recommend everybody do. Okay, in closing, here's some upcoming accounting and auditing events. If you missed the 3-credit A&A update Frank Boudelet and I recently presented, there's a live replay taking place on May 17th. The NJCPA Convention and Expo, which is taking place June 11th to the 14th in Atlantic City, offers several A&A sessions. And you can learn about implementing the new risk assessment standards on June 20th. Get information on these events and more at njcpa.org/events. And of course, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.